I like to hold you guys out as an example to follow for our other clients that are either considering or don't quite meet the standard that you've got to here at Jackson.
For the past several years, Jackson County has brought in an independent organization to audit the county's financial performance. And each year, Moss Adams has found the county's financial standing to be very healthy and a model for success. Well, 2018's audit was no different.
Over your financial statements, we were able to issue an unmodified or clean opinion. So that means we were able to get comfortable that we didn't think that there were any material mistakes within that 200-page document. So that's a huge feat alone.
You know, we do this audit, and really our opinion is about the accuracy of the financial statements, but sometimes it's good to look at how you're doing and also maybe relative to your peers. Here's your revenues for the last 4 years. A couple interesting things there. Charges for services is about what I would expect. You've had a nice increase there, and you've actually probably been forced to do that or to get more creative, primarily because of the next one, which is property taxes. You only get about 25% of your revenue from property taxes. Your larger cousins up north are probably in the 30 to 40% range. So you operate off of relatively fewer property taxes than the other counties, or at least the ones that have more population base. This is a slide that's really telling on that property tax. So here's your tax rate compared to some of the counties up north. I mean, you're just a little over half of their tax rate. Imagine how life would be so much easier for you if you could have a tax rate that was more in line with some of these other counties. And then the lighter bar on the right is the spendable resources that really you have at your discretion. So you can spend them pretty much at your discretion. And what's phenomenal about your statistic there, for most counties, that far right bar is actually negative now because it includes that liability. Danny's talked about this accrual method of accounting. You know, as soon as you had to park your PERS liability and your other post-employment benefit liability on the face of the statements, you don't have assets in many cases to offset those liabilities, and so it drags your equity down. So a lot of the counties in Oregon now are negative there. So what that means is you've retained some resources at year end to actually cover even the long-term liabilities that you have at the county. So a very nice position to be in relative to your peers. This is just the general fund. This is where a majority of your discretionary dollars are and where a lot of the governmental programs are. So this looks at the revenues, expenses, and then the fund balance. And you'll see for quite some time you have actually retained some of the revenue. You haven't spent it all. And I know that some of that is intentional. The other thing that's unique to you is this slide too, which is your debt is declining. So your debt here at the county, long-term debt, is made up of a couple different kinds. The general obligation bonds are property tax supported. So you went out years ago and you asked the community for some money through a GO bond that's repaid with property taxes to do certain capital projects, and you'll notice that you're almost done paying this off. And I don't know if it would be scheduled to be all paid off this year you're in now, but I think you're probably going to do that next year. Okay, so that's a pretty unique position to be so little debt. I like to hold you guys out as an example to follow for our other clients that are either considering or don't quite meet the standard that you've got to here at Jackson.
This is the 5th year that I've been sitting here for these, and it's always clean unmodified opinion. It's like, well, that's expected, but it's not expected. That's actually remarkable, especially when we're talking about just a mind-numbing amount of highly scrutinized reporting standards.